Welcome to my breakdown of Palantir stock. In this video, we're going to explore 3 of the top reasons to invest in this company's stock. Additionally, we'll look at 3 reasons why you should avoid Palantir. In the end, you'll know if investing in Palantir is worth it or not. Let's get right into things. The first reason to invest in Palantir is strong financial performance. Firstly, Palantir reported a significant increase in revenue, with quarterly figures rising to $608 million, marking a 20% year-over-year increase. Their annual revenue for 2023 also reflected a healthy growth of 17%, totaling $2.23 billion. Secondly, the company has sustained its profitability, reporting a GAAP net income of $93 million in the fourth quarter of 2023. This marks its 5th consecutive quarter of GAAP profitability. This consistent performance underscores the company's ability to manage expenses and optimize operations effectively. Lastly, a strong indicator of financial health is cash flow, and Palantir excelled here as well, achieving an adjusted free cash flow margin of 50% for both the quarter and the full year, with amounts totaling $305 million and $731 million respectively. Such robust cash flow metrics are crucial as they provide the company with the financial flexibility to reinvest in its business, pursue growth initiatives, or return value to shareholders. The second reason to invest in Palantir is they are committed to innovation. Palantir has been recognized for its achievements across multiple categories, including AI, data science, machine learning, and cloud business intelligence. These accolades from the Dresner Advisory Services 2023 Technology Innovation Awards demonstrate Palantir's breadth and depth in providing cutting-edge technological solutions. Additionally, Palantir was awarded a significant contract to develop the Titan Tactical Intelligence Targeting Access Node system, which integrates high-altitude and space sensor data for battlefield intelligence. This project not only showcases Palantir's expertise in handling complex data integration and analysis, but also highlights its ability to innovate in software solutions that support critical military operations. Lastly, Palantir is also pushing the boundaries with the development of a new artificial intelligence platform, AIP, that combines machine learning technologies with the latest advancements in large language models. This platform is designed to serve both commercial and government sectors, emphasizing Palantir's role in shaping future AI applications. The third reason to invest in Palantir is expanding global presence. Palantir has secured a significant global enterprise deal with Stellantis, one of the world's leading automakers. This partnership involves deploying Palantir's Foundry operating system across Stellantis' various brands and functions worldwide. This move is intended to enhance Stellantis' digital transformation efforts, improve supply chain performance, and increase the efficiency of their marketing and sales efforts. Additionally, Palantir has continued to strengthen its presence in Australia through a partnership with Westrac, one of the leading providers of heavy mobile equipment. This collaboration focuses on leveraging Palantir's data analytics capabilities to optimize operations and enhance service delivery in sectors like mining and construction. Also in Canada, Palantir has expanded its reach through a partnership with Carahsoft, which now acts as the sole distributor for Palantir's software to the Canadian public sector. This arrangement facilitates the acquisition of Palantir software by various government entities, enhancing their operational capabilities and supporting their digital modernization initiatives. A major reason not to invest in Palantir is business model and revenue concentration. Palantir was originally founded with the idea of focusing on government contracts, particularly in the intelligence and defense sectors. A significant portion of its revenue comes from these contracts. For example, Palantir's work with the U.S. government includes projects like providing data analytics for the Department of Defense and intelligence agencies. These contracts are typically large and lucrative, but come with high stakes and significant scrutiny. Palantir's financial health is heavily dependent on a small number of large clients. In the past, reports have indicated that a significant percentage of its revenue came from a handful of customers. For instance, in earlier financial disclosures, Palantir noted that a substantial part of its revenue was derived from its top 20 customers, indicating a high level of revenue concentration. This scenario poses a risk because the loss of even one major client could have a disproportionate impact on the company's financials. The nature of Palantir's business involves long sales cycles. Securing a government contract is often a lengthy process that requires navigating complex bureaucratic procedures and compliance requirements. Once secured, these contracts involve intricate implementations tailored to specific and sensitive use cases, like surveillance or managing large data sets for intelligence purposes. The second reason to not invest in Palantir is growth, sustainability, and profitability concerns. Palantir has historically operated at a loss for many years since its inception in 2003, only achieving profitability on a GAAP basis in more recent times. Despite growing revenues, the company's heavy investment in sales, marketing, research, and development has led to sustained net losses. For instance, while its revenue grew impressively over the years, the company's spending on marketing and sales often approached or exceeded half of its revenue, which significantly delayed its profitability. Palantir's business model involves significant upfront costs related to software development and the customization required to integrate its platforms, like Gotham and Foundry, into the complex operations of its clients. This customization is crucial to making the platforms effective for specific client needs, but entails high labor and development costs. These high initial costs contribute to profitability challenges, particularly when expanding to new clients or markets. Also, while Palantir has a strong foothold in government and defense sectors, its expansion into commercial markets has presented challenges. The commercial sector often requires faster sales cycles and quicker time to value, areas where Palantir's complex and high-touch integration model can be a disadvantage. This slower expansion into commercial sectors limits its growth potential relative to competitors that may offer more scalable or less customized solutions. The third reason not to invest in Palantir is ethical and privacy concerns. Palantir's software platforms, such as Gotham, are used extensively by government agencies, including intelligence and law enforcement, to integrate and analyze large volumes of data. This has raised concerns about mass surveillance and the potential for abuse of privacy. For example, the company's involvement with the U.S. Immigration and Customs Enforcement has been particularly contentious. Palantir provides the technology that aids in deportation operations, which has led to protests and calls for the company to sever these ties due to human rights concerns. Additionally, the nature of Palantir's work with data, including predictive policing and counterterrorism, poses significant ethical questions. Predictive policing tools can potentially lead to biased law enforcement practices if the underlying data or algorithms are flawed. The ethical implications of how data is used and the potential for it to reinforce systemic biases are major areas of concern. Lastly, Palantir has been criticized for its lack of transparency regarding the specifics of its data sources, the exact nature of its data analysis processes, and the safeguards it employs to protect privacy. This opacity is partly due to the sensitive nature of its work, but also because of the proprietary nature of its technology. The lack of transparency makes it difficult for the public and even some clients to fully understand how data is being used and managed, leading to concerns about accountability in cases of misuse or errors. When considering investing in Palantir Technologies, it's important to recognize its recent achievements and potential challenges. Palantir has recently reported several quarters of GAAP profitability, with a noticeable upward trend in earnings, indicating a solidifying financial base. The stock has shown significant volatility but achieved substantial gains, rising by 160% in 2023, reflecting both high potential returns and risks. Palantir's revenue is robust, particularly from government contracts, which are a major source, supplemented by a rapidly growing commercial customer base, which expanded by 40% year over year as of early 2023. Analysts are optimistic about the company's future, projecting approximately 20% annual revenue growth over the next 2 years. Strategically, Palantir has been proactive, notably through a $1 billion buyback program, signaling confidence in its financial health and a commitment to shareholder value. However, potential investors should be cautious of the high PE ratio, indicating a high stock price relative to earnings, which might suggest the stock is overvalued. Looking forward, Palantir is focusing on increasing profitability and capitalizing on its advancements in artificial intelligence, which are expected to drive its long-term success. For investors, it's crucial to consider how these elements align with their investment strategy and risk tolerance, keeping an eye on both the company's innovative approaches and market responses. And if you really want to make money with the stock market, make sure to click the link in the description to check out Insider Newsletter. I've reviewed hundreds of stock picking newsletters, and Insider Newsletter performs the best by far. On top of this, it's only $1 to try. So again, click the link in the description to check out this newsletter.